Good morning, everyone. Once again, welcome on this chat. And today I'm very happy to announce that today we have a very, very special guest, one of the top, most bankers in India, Mr. Vimal Bhandari with us. Welcome, Mr. Bhandari.
Thank you very much.
Mr. Bhandari has been in financial services for long, more than 40 years, has to be the first employee of ILFS along with Mr. Ravi Parsasathy. After that, he headed a large NBFC called Indostar in India, and he also headed Aegon, which is a Dutch company in India, who had two interests in India. They have been mutual fund as well as they have in life business. Now, Mr. Bhandari is heading another large NBFC called Arca Finance, which has been promoted by the Kirloskar Group. So I think it's great to have Mr. Bhandari on this chat, and we can definitely ask him his views on the credit and the possible, there for the small and medium enterprises. Sir, just to start with you, what do you feel on this pandemic in general view, sir?
Well, the pandemic is in literal and real sense a reset button for the way we live and the way our work is going to be done. It is unexpected that how one virus can bring the whole world to its knees. And we are learning as we are living this whole pandemic. And this has had severe repercussions both on the economic side and on the social side of life. And everyone is coming to grips with it. Lockdown is a completely alien concept, and it is amazing that a country of our size has been effectively locked down for 30 days, nearly 30 days, with the full concurrence and support of the citizens. This will have huge impact moving forward on the way we live, the way we work, how business evolves, and what our priorities of life will be, or what our priorities of business will be. So everyone should see this as a reset button to unlearn some things and to learn new things on the emerging tomorrow.
Sir, I'm going to be more specific with your huge experience, and I'm sure if not this magnitude, but you must have seen other kind of situation like this. So, what is your view that post this COVID scenario, this credit flow in the marketplace means how banks and NBFC gonna behave probably?
So right now, I think overall availability of credit will become a challenge. It will become a challenge till all the lenders are able to assess which are the new players or the existing players who will survive in the new business paradigm. There are two or three impacts which will be felt. One is the legacy borrowing portfolio which a lot of companies have had, and the borrowing which companies were carrying through. Depending on each industry subsegment, an analysis will need to be done to see how many of them will be able to sustain the changed business paradigm effectively. So first, bankers are going to wait and watch to see how the government support and the helps these companies to regain some of the business vitality, and how effectively and efficiently they are equipped to handle the changed business scenario. So till this period of readjustment is fully internalized, which can take anywhere up to 1 year, credit flow will be available on a very scarce basis. It won't dry up, obviously, but it will be available to those who deserve it the most, which would be a function of their financial standing and their business planning. So it is important for each and every person to basically focus a lot more on their business and financials in a very robust way to see that they still pass the test to be eligible for financing.
Sir, what is your view on this ghost of bad debts arising out of this kind of a situation? Although RBI recently today have given the moratorium for another 3 months, but what do you think that the ghost of this bad debts gonna affect?
See, we will have to live with one other wave of bad debts. What RBI has done is that they have given additional time to remove the immediacy of an NPA, because effectively now till at least June, any credit which had gone bad on 1st March, house in order, which is very difficult. But at least, what would have gone bad in 90 days as SMA3, well, now you'll get another 90 days because of the standstill. The larger issue is that the NPA problem will be the one which will be hobbling NPA, the banks in the NBFC. The NBFCs, obviously, given their limited resource base, will be hit more, and therefore their their ability to continuously sustain the borrowing community will become a little more difficult. And therefore, it is desirable that more and more companies who should start exploring banking relationships as a way forward. If people are broadly dependent on NBFCs and less dependent on banks, they should start making effort to become a little less dependent on NBFCs. The bad debt situation, we still do not know what is the government's view on the resolution plan. But what we see from a broader basis and based on what industries will get affected, the NPAs will be substantial, and the worst hit will be in the inverse pyramid. Small and medium will be hit more than the medium enterprises, which is a reality of life. Because at the small and medium enterprises, all of them are undercapitalized and have limited financial muscle power to withstand such a thing. So it will be a reality of life, and it is important for every borrower today to relook at the numbers in a very close fashion, to remember three things. Cash is king, so don't worry about profit. First, look at cash flow and see that your business becomes liquid. Even if you have to, for instance, if you have a due or collectible, instead of waiting for the guy to pay, try and cut a deal with him, collect cash from him what you can, and ensure that you are able to have adequate financial resources. Secondly, revisit your entire cost architecture. The businesses will change and cost will become a killer. So look at the cost from a zero-based budgeting, see whatever the non-essential costs which you are carrying. Every business carries it, big or small. It's a function of time. Get rid of them in a very merciless fashion. And third is, whatever capex is not being incurred, or you were in the process of incurring capex based on your market scenario analysis, just put a pause and take a revisit so that you do not commit additional capital on capex till you have a fuller clarity on how the markets will evolve.
Sir, while working on this segment called SMEs and working very closely with entrepreneurs, what observation we have come across that most of the promoter doesn't differentiate with his personal assets and business assets. So what do you suggest to them on this topic?
Well, I know that, in most of these, it is a very difficult situation, but I would say that you have to go into the hierarchy of assets. If the personal assets like the house you live in or the office you work from is mortgaged, that needs to be released fully, because unless and until your family is secure, you will never be secure. So first is ensure that your personal assets, to the extent it sustains your living standards and your quality of life, even on a reduced basis, that is first which you need to get free. The second then is to look at your business assets. This divisionalization of assets is not an easy task. But it is very necessary to do, because when businesses, I've seen that when businesses tend to go downhill because of such events, then people get dragged in, both their personal and business assets get aggregated, and it creates a huge amount of turmoil, not only on the business side but even on the personal side. So please look at your asset composition. To the extent you have got personal assets which are core to your existence, mortgage for the business, see what is the best possible way to demortgage them and to take them out of the ambit of your business loan. Treat business assets and business loss as one bucket. Treat personal assets and personal life as second bucket, so that even in the worst case scenario that you end up losing a lot of money on your business, your personal family life doesn't get disturbed unnecessarily.
So one thing we also observed that, before this COVID and the way the government was trying to boost up the credit flow in the system, most of the SMEs are, in a corner where they want to change their bankers, or they want to shift for enhancements of limit to other bankers. So what is your advice to those businesses? Do they change their bankers, or will that change will happen or not? What do you say, sir?
No, so I think wherever you've already had a good satisfactory relationship with your bankers and or your lending agencies, continue with them. Your good history of good relationship with them will help you a lot in these difficult times. At the same time, based on your business needs, you will realize that your existing banker may not have the risk-taking capacity on you to help you sustain your growth. So you will need to get newer lenders into your fray. But just wait for that for a couple of months. Let this whole dust settle down, because you will also get an assessment which banks and which lenders are more committed to growing with the SME segment. And once you know that who the new players are, then you know you can pick and choose from them. It is always better to broad base your relationships so that your dependency ratio comes down. One important thing everyone is learning from the COVID is that high level of dependency on one or two counterparties, be it as a customer, supplier, financer, business location, business geography, is not fully desirable. So obviously at the SME sector, what you need to be very careful of is your dependency on single customer, single supplier, and single banker.
Well, I know that this is really pearls of wisdom from you, but like in a practical scenario, what SMEs are facing is pile of debtors and the pile of inventory. Any suggestion to handle those debtors and inventories in this kind of a illiquid market, sir?
See, it is a very difficult choice today because the system has come to a halt. No one going through a deflationary cycle. So, value inventory is eroding. The only, each businessman will have to look at the specifics of his case. But my only submission is that to the fire sale, you're able to get cash, it's much better. The cycle and business deterioration is not going to stop in the foreseeable months, and therefore it is much better to cut your line. This is not a generalized approach. Each guy will have to see based on his own better to cut your losses to the extent feasible. I know it's easier said than done. You will still turn out to be a winner.
I think very nicely mentioned, and I think that a lot of people will hear it and they will take advantage of your pearls of wisdom. Thank you very much, sir, for being.
Thank you. Thank you very much. Thank you, Deepak. Thank you. Thank you very much.